Right, I'm live somewhere. I don't know who else is watching me, but I'm live somewhere around the country. Oh, I can hear feedback. But I'll just maximize myself so I don't see one of my colleagues, Bridget. And so this is me. If there's anybody out there, I think you can let us know somehow. I do have technical people with me before we start the workshop or the seminar. I've got Bridget Headland in the bottom right-hand corner that I can see. I don't know whether you guys can. Bridget's a finance expert. I'm certainly not. I'm at home at the moment, funnily enough, and this is my first webinar. Something around the pool has just fallen over. So this is my first webinar, and this is Gay. She's organised the whole webinar. So if anybody's out there, and we were going to do it outside, but it's a little bright here. We're in Queensland, and it's a little bright. So we decided not to sit in the office at home, and we'll just sort of hang out here and wait for everybody else to turn up. How do we find out if people have turned up or not? But if you're online, and I know by now there are some people online, so we've got a couple of minutes before we start, so I'll just ad lib. It's interesting, this morning I did a small video saying what we were going to do today as a reminder. And I've been away for 4 weeks, and I've been traveling around. Inevitably, when you travel, people say where you're from. They don't believe I'm from Australia, but I am an Australian. So they say where you're from. When you've established some sort of friendship like that, then they ask you, what do you do for a living? And it's kind of difficult because I don't really do anything for a living because I'm an investor. And when you invest like me, that becomes your living. And then what happens is that you make lots of mistakes as a first-time investor and even a second-time investor. And then eventually you find a system that works for you. And so what happened with me is that I showed my best buddy that system. And it worked for him as well. And he said, well, we should have a bit of fun telling other people about it. So really what you're going to get today is just people who are investors, not salespeople. We're not here to sell you anything. We're just going to tell you how we did it. It's pretty simple. So we're going to start pretty soon. I might get Bridget to mute herself because I'm hearing myself through a colleague's computer. So did you get that, Bridget? She's done it. Oh, that's better. So I was hearing myself. So I'm going to get the tick from my director any minute. We're going to start the webinar. As I said, this is my first webinar. Generally, I like to stand in front of people and tell dad jokes and have the occasional glass of wine and find out other people's story. I don't think my story is terribly exciting, even though it's got me through. I don't think it's very exciting. However, the reason why I like to do these workshops live, and we are doing one in Queensland on Thursday night at Hendra, if anybody's interested, is because I actually get to find out how our system can fit with your goals and your reality. What we're going to do today is just a little bit of that workshop. So it's kind of crazy me just talking into a mic for the next 40 minutes or whatever it is. But let me tell you, you will get a lot out of this. As I say, when you're traveling around the country or traveling around the world, you bump into other Aussies. Last week I watched 2 grand finals and I was in Hong Kong. And the whole bar for 2 days was full of expat Aussies watching the 2 grand finals. And they ask you what you do, and I've said, I'm an investor, but, they say, oh, I'd like to be an investor, but I can't really afford it. And so today's workshop or webinar is actually showing people like them and like you can afford it, or at least you will work out whether you can afford it or not. This is only part of property investing. And the biggest part about property investing is realizing what you want. And what you need at the end of it. What are your goals and what are your targets to be able to get those goals? We're going to go through a little bit of that, but basically today we're going to do a very, very, very generic calculation on how much an investment property might cost you. I've pre-recorded this so I don't make too many mistakes. I pre-recorded it, but in the live workshop, you'll be able to ask questions, etc., etc. So if you want to hold on to the end of this, because some of your questions might be finance related, then what I would suggest you do is you hang on till the end and type your questions through, and we'll give you answers straight away. If we can't give you the answers straight away, that might be because somebody has to check on a bank's response to your question, or it might just be too complicated to do straight up. But we're going to start this in a couple of seconds. But let me just tell you first up, I am not a guru of any sort. I'm not a finance guru. I'm not a property guru. I don't profess to be. I'm an investor, and it just worked for me. However, it took me a long time for it to work for me because I've made some beauty mistakes. Invested in the wrong area, invested in the wrong type of property. And, so I've made those mistakes, but I'm not going to allow you or any our other clients make those mistakes. The biggest moment for me was realizing that I couldn't do it on my own. The whole idea that I had the skill sets to build a property portfolio, well, have a look at me. I'm not the smartest crocodile in the pond, but I realized that I needed other people. I needed professional builders. I needed, finance experts who would help me get loans from different lending institutions. I needed, obviously, property managers because, let me tell you, if you have a large portfolio, you're going to need property managers. I needed all sorts of people that are in the property game, from solicitors to building inspectors, etc., etc. It takes a whole gamut of people to build a property portfolio. Obviously, with the skill sets we have individually, we may not be able to do that in the time that we want to do it. So my first clue to you is build yourself a panel of experts. And not just your cousin down the street who's got 2 properties in the same street. Do as much research as you can. I know there's many websites out there these days that say the secret to investing. Well, there aren't any secrets. Believe me, there are no secrets. It's all out there. Somebody has, trailed that path before you. So if you can find somebody who's got multiple properties and knows how to build a property portfolio, go and have a chat to them. We do that at the Australian Property Panel. And the other part about having a property panel and different experts, for want of a better word, is I want you to find people that are independent. There are property companies out there who own the mortgage broker. They own the solicitor. They own the building company. They own the land company. They own the property management and all of the gamuts that you're going to need out there. They own all of that. For me, that's dangerous. You should have independent advice at each stage. But that's a long way down the track. I think today you're going to have to, after this webinar, you're going to work out whether you are going to be an investor or not. And let me tell you, investing isn't for everybody. There are some scary times ahead for all investors, even successful investors like myself. We still have to monitor what we do. We still have to understand the guidelines that the government and the taxation department put out on our behalf. So there's lots of things that you have to keep yourself updated with, even if you are a successful investor. I am. But getting back to what we're going to do today, we're going to pick a generic house price, and whatever your wages are, you're going to be able to work out whether you can afford to hold that property. Now then, there are several ways of buying property. Principal and interest, interest only. You've heard about gearing, negative and positively gearing, and all that sort of stuff. I personally buy property with a focus on capital growth, and I use that growth to buy more properties. So let me just tell you about the Australian Property Panel. It started because I was just teaching my buddy and my best mate how to invest in property. He's a chippy, and of course, he could renovate properties. I couldn't. I don't have the skill set. So he was doing it one way, and I was doing it another way. And our wives, who've been best friends for a long, long time, decided that they should get us together and decide and see if we could work out a way to help my best mate and his mates as well. So all of a sudden, we had a company that went around the country and told everybody what we'd done. And so, as a national company now, and we're not a sales company, by the way, what we do is go to each area, like we'll go to Port Macquarie or Darwin, and we'll find local experts to help us educate other people. Now, that might be an accountant or a financial planner. They're all on the property panel. So that's kind of what we do. And so if you could catch up with one of our workshops, it'll be well worth it, because you will see some of the specialists in the panel that are there to help you. So I think we should get on with a little bit more. Oh, we're ready. Oh, we're ready to go. I've just been told we're ready to go. So what we're going to do, you're going to go from the crazy me, and somebody else is going to come on and press a little button that'll show you a video. The two things that you do need right now, if you haven't already done it, is download a couple of worksheets. There and a tax office guide to how much tax you pay. Because part of this is we're going to show you how the taxation department allow you to get some tax deductions with your property. So you're going to have a tax chart and also a cash flow analysis chart. So if you've got those two things, I'm going to watch the whole show like you, and I'm going to be prepared to answer questions at the end. And so is Bridget from Vision Money, an independent mortgage broker. She's going to answer questions if you have them. So enjoy the next few minutes, 15 minutes, whatever it is. And by the end of it, I promise, you will have found out whether you can afford to hold an investment property in the kind of system that we use. Hi, the contents of this presentation is for general information only. It is not intended for specific advice. For specific advice, you should consult a suitably qualified professional that will advise you on your precise situation. The Australian Property Panel is not a licensed financial planner. All of the information in this presentation is from my personal experience and therefore my personal opinion only. I hope you find it useful. How much would a property investment cost me per week? Cash flow analysis, interest only version, narrated by Peter Spencer. By now, you would have downloaded a form from our Facebook site, from our website, or even our webinar site. The form is called Cash Flow Analysis. Now I'm going to guide you through that form. Okay, in this example, we're going to buy a property interest only, and we're going to work out by the end of this how much that property might cost us to hold per week. So let's say we buy a property at $480,000. I would borrow another $20,000 on top of that to pay the interest during construction, my solicitor's fees, stamp duties, etc., etc. So we're borrowing a total of $500,000. Now let's say our interest rates are 4.7%. That means we have to pay back $23,500 per year. Now if we break that down into weekly amounts, our weekly repayments are $425. Our rates on average about $57. Building insurance, let's say it's $23 a week. Maintenance, this is a brand new property. I'm not going to put any maintenance down for the first 5 years. Agents' fees, let's say they get 9% of the rent, and our rent here might be $450 a week, for example. So agents would get about $41. So if we total that up, this would give us our total outgoings to hold this property, which is $573 per week. That's our total outgoings to hold this property. However, we will have some income and we'll have some tax deductions. So let's have a look at that. So we've established that our property will cost us $573 per week to hold. However, our rent of $450 gives us a weekly initial shortfall of $123. But if we put the rent up next year, that'll decrease. At this stage, $123 is our shortfall, and if we times that by 52, it gives us a yearly shortfall of $6,396. That $6,396 goes into our tax deduction suite. Now we've just got a reminder in the yellow writing from the ATO of an income tax variation form, NAT 2036. NAT 2036 is a form that you will have your accountant fill in on your behalf and lodge it with the tax office. This allows you to get your deductions connected with this property back in your pay packet every week. So let's talk more about deductions. We know we can depreciate the building over a period of time. We know we can depreciate some of the fixtures and fittings or the plant. However, there are three components in a property: land, the pure building itself, and fixtures and fittings or plant. Let me give you an example of those three costs. Our land content, $261,000. The pure building itself, $189,000. And the fixtures and fittings or plant, $30,000. Another reminder has just popped up in yellow. Quantity surveyors report. This is a depreciation schedule. The $30,000 for fixtures and fittings cannot be guessed. As with all investment property, my advice is to get a registered quantity surveyor to do a complete report on that property. You give that report to your accountant, and that will help your accountant complete the NAT 2036 form. The quantity surveyor's report is very important. So let's dig deeper into how we use this report. The golden rule in property is that land appreciates, buildings depreciate. The example of our building, the pure building itself, is $189,000. Now we can depreciate that building at 2.5%, which gives us $4,725 a year on average for the next 40 years, because that's the lifetime of a new property in Australia. The next part is to work out our depreciation on the fixtures and fittings or plant and equipment. Our quantity surveyor's report gave us a figure of $30,000. There's several ways of doing this. However, for the sake of this exercise, let's say we depreciate that $30,000 over the next 5 years. That gives us $6,000 a year for the next 5 years. The next line in our tax deduction suite is loan establishment deductions. If you remember at the beginning, we borrowed an extra $20,000 on top of the purchase price. This was to cover solicitors, accountants, professional services, interest during construction. Within that $20,000 was our stamp duty. Unfortunately, that is not a tax deduction. So we have about $15,000 worth of tax deductions in our loan establishment suite. Much of this you can claim up front, but for the sake of the exercise, let's say we did it over the next 5 years. That would give us $3,000 a year back over the next 5 years. Well, that was a long exercise, but well worth it. That's our tax deduction suite. If we add up all of the figures, it's $20,121, which is a pretty fair tax deduction. The next part is the tax chart. What I'd like you to do is identify your gross income and then identify what current tax you are paying. For this example, I've used somebody earning $60,000 a year and they pay a little over $11,000 tax. On this final slide, we'll identify what our weekly contribution is to holding this $480,000 property. So we've identified that this chap's current taxable income is $60,000 and his current tax payable is a little over $11,000. His tax deductions are $20,121. So we subtract that $20,121 from the $60,000 and that gives us a new taxable income. For this chap, just under $40,000. We go back to the tax chart and see what his new tax payable will be on his new taxable income of $40,000. Let's place the $4,547 in box B, new tax payable. Next, we have to do some maths. We subtract box B from box A. We place the answer in box C, and that answer is $6,500. This represents the new yearly tax benefit. We simply divide that figure of $6,500 by 52 and our answer is 125. We put that in box D, weekly tax benefit. So let's conclude what we've done through this whole exercise. Our weekly outgoings to hold this $480,000 property was $573. The rent from our tenants was $450 per week. This left us with a shortfall of $123. However, after tax, we get a weekly tax benefit of $125. The maths are pretty simple. It's going to cost you nothing to hold this property. In fact, it'll give you $2 a week. Thanks for participating in the exercise. It was obviously quite generic and not meant as specific advice. We have several other exercises that might help you to understand how to invest in property. Property investing is not for the faint-hearted. It has its pitfalls and its speed bumps. But with the help of the Australian Property Panel, you'll be able to circumnavigate all obstacles.
Okay, go.
Well, welcome back. I hope you got something out of that. As you can see, it was pretty quick because we can't hold everybody's attention for 2 hours here. And let me tell you about time. You do not need to go to weekend workshops to learn how to invest. If you hang around with successful people, they'll leave some clues. Or if you come to one of our workshops, you'll be there maximum 2 hours, and then you'll be able to sit down with our people and talk about your personal needs and wants. Because as you've seen from that program that we just did there, if you're earning $60,000 a year, it's different to somebody who's earning $100,000 a year. Also on that one that we've just done, if you're with a partner and your partner earns 50 grand and you earn 50 grand, added up, it doesn't mean that you're being taxed on 100. So there are differences there. You're going to get lots of, we're going to get lots of questions as we do during a workshop. We get people asking us, oh, look, my partner earns a lot more money than me, and should we put the property in his name? Now, there's lots of stuff we can tell you one-on-one, but we can't actually offer that advice generically over the line like this. So what I've done, I've asked Bridget Headland from Vision Money, and I believe that Bridget's in her office in Brisbane, and I know she has an office up in Darwin and one in Port Macquarie as well. And so if you have any finance questions and you want to type some questions through, I'm sure we're going to be able to see them. So I've got some questions here. one from
Don't know why it's go testing.
testing. Here we go. I'm sorry about this.
Las Vegas guy.
We've got somebody in Las Vegas looking at us. Let me tell you, if you're in the UK, any of my family or friends, or you're in Las Vegas, hopefully you're an Aussie. The tax systems might be different, so that might not work. However, he's an Aussie. We've confirmed he's an Aussie. I have been told by my friends that interest-only loans are more expensive. Is this true? Bridget, would you like to join in?
Yeah, sure. So thanks for the question. Interest-only loans are a little bit more expensive these days. So recently we've had some changes where it means that there's essentially a loading on interest rates when you're running it interest only. So first thing that we do is we sort of sit down and we go through financially where you're positioned. And we'll go through the pros and cons of running both an interest-only loan and then potentially running like a principal and interest loan. So it really comes down to cash flow, and it comes down to things such as, have you got a home loan? Is the main focus to pay down that debt first? So yes, testing, you are correct that the interest-only loans are more expensive, but there's definitely benefits, pros and cons to both. So we can go into that more if you'd like.
Okay, how do people contact you though?
I believe my details will be coming up shortly. I think there's a form that's going to be attached in there. One of the things that we're sort of offering today is around borrowing capacity. So there's a form that's attached within the webinar that if you want to know financially how much you can afford, you can complete that form and send it through to me. So all my details are on there.
Cool. We have another question, I think. Yeah. Excuse me, scratching over here and reading. I'm on about 3 computers at the moment. Right. Hey, Pom. Yes, obviously I'm English, so people do call me Pom. Hey, Pom. Here we go. That was really good info and simple to see. It's achievable. So where should we invest based on this? Okay. It's a very, very broad question. Let me explain. For me, and I'm in my 50s, and that person there might be, who's asked the question, they might be in their 30s. We get a lot of young people, dynamic young people, professionals at our workshops. And for me, it's a totally different place where I would invest for somebody who has a long-term goal. If this is your first investment property at 30, it depends what you want out of it. So let me break it down this way. If I was a first-time investor at 55, then I would need a different strategy to somebody who's 30, who's investing for the first time as well. Because I'm looking at retirement at 55. I'm looking at building a nest egg. And so my criteria is slightly different to somebody at 30 who's got another, say, 20 years or whatever, working capacity. And also it comes down to what you want. In our regular workshops, you'll identify with your own little booklet how much you want to live on. Say you want to live on $150,000 a year. Well, what's going to achieve, or what vehicle is going to achieve you to be able to have $150,000 a year passive income? Now then, if you only want to live on $50,000 a year, again, your strategy is different, but we can work that out with you. But in general, to answer that question in a long way around, I have a criteria that I select when I select property. As I've said, I buy property with a focus on capital growth, and I use that capital growth to buy more properties. Part of my criteria, in fact, I can even break it down to 28 single points of my criteria that will focus on capital growth. Obviously, I want infrastructure, and I won't go through the whole 28 right now, and I believe on our website you can get it. And I think a couple of weeks ago, if you look on our YouTube site, that's linked via our Facebook, etc. I think I've gone through the 28-point criteria as well as other things that are on there. But obviously, I want infrastructure. And you know what? I like families in my investment properties. And so families mean children. And that means I want my investment property to be close to schools. Well, you might say this about everything, but not particularly. If you're 22 or 25 and you're investing for something in the future, you might be from somewhere like Tamworth and you want to invest in your own town or eventually go and retire there. Well, that's a long-term investment. However, I want my properties probably to be able to duplicate from them probably every 12 years. And so, yes, I have a very strict socioeconomic demographic criteria that I stick to when I buy investment property. Now then, you can have that criteria. You can get it from our website. You can call it one of our offices, email any of us. However, again, it might change tomorrow because the goalposts change every day. Certainly in the lending industry, as Bridget will probably confirm, and certainly in the property industry with the government changing the rules, etc., etc. So the knowledge you had 5 years ago may not be the knowledge that you need right now. So I implore you to ask individual questions via our Facebook page or via any other social media that we have, or certainly turn up to a workshop. If it's finance, it's very, very, very particular. And so you should see your mortgage broker or get a second opinion from Bridget's office, as she's here now. You can get second opinion all afternoon, I understand. But yes, to whoever it was called me Pom, I have a strict criteria, but it differs when your age group differs, and also that you have to have a lot of hard research to find that criteria. Just having the 28-point criteria may not work for you because the data might be old. So we have a whole research team that we put out when we ask our clients to probably look at a property that we might suggest might work for them. Another question.
Las Vegas do.
This is again from Las Vegas, so this an Aussie, obviously on holiday. What are the advantages of building over buying established properties? Well, as you've seen, there's a lot of answers here as well. As you've seen with that, just with that tax structure, the first thing is that people fall in love with something that looks nice. However, without building inspectors and the rest of the team, you may be buying a melon. The other part about that is that when you buy an established property, you will pay stamp duty on the completed property, on the complete purchase price, which might be $500,000 or more. If you build and you purchase a block of land on one hand, and then you get a builder to build on your behalf, you only pay stamp duty on the block of land. Now that could be $5,000 or $6,000, but on a completed property, it could be $20,000 or $30,000. Now, I can't give you this advice. You're going to have to ask your accountant, but my accountant tells me that stamp duty is not a tax deductible cost. So there's one advantage. The other thing is that when you buy a completed property, it may be old. I don't know. You might like to renovate. With me, when I buy brand new properties, I'm going to get 40 years of tax deductions from that brand new property. 40 years, because it is a brand, that's the lifetime of a building. And so, but if you bought a property that's 20 years old, then you may miss out on some tax deductions. Obviously, a brand new property has new fixtures and fittings and carpets and air conditioning systems, which I can use in my tax advantage by getting a better depreciation than something that might be 15 years old and all the tax advantage might be gone. So a roundabout answer again, but yes, I think we're going pretty well. We might have another question. There's lots coming through on my iPad and my phone as well. Lots of text messages by lots of people. So there are obviously people engaged, even our current clients. And that's another thing. We have a lot of current clients. So if you want to see what the journey is like from a client point of view, contact somebody on our Facebook as well. We won't know that you're contacting them personally. Make friends with them and ask them how the journey went with APP. Oh, something else has come up. Another question. Somebody else commented on the video. Oh, do you help us find the property? Yes. The thing is, when we offer such service, and by the way, our service is free. We're not a property management company. We're not a buyer's guide or anything like that. However, we do have contacts within the industry. We know where the best land is coming out of the ground. And would we help people buy property? yes, we'd give you the guide, we'd educate you first, then make sure that your finance is intact first, because before you even start getting rosy eyes about property, the first thing you need to do is organize your finance. The foundation of all property portfolios is the finance. If you don't get that right, everything could fall over. And make sure that when you get your finance from your broker, and I'm saying broker because I prefer to use brokers instead of banks, because I get a personalized service and personalized interaction. When you do talk to your broker, make sure that you tell them your long-term plans and not just get a loan for this first property. You've got to take into consideration how you get in and out of loans as well. But do we help people buy property? Yes. And how do we do that? By educating them first. We'll educate the heck out of you. And then you will know what to find, when to find it. We'll help you with location. If people come to us and say, listen, I've got a great location, then we'll make sure it fits with our research and our criteria before we'll even introduce you as a client to that property. But you don't pay us. You don't pay us at all. One last question. Oh, right. Listen, I'm getting all excited now. As you can see, I'm pretty passionate about what we do. I was very passionate about when I made some mistakes, and I was a procrastinator. So let me say a couple of things. Analysis by paralysis. If you look into things too deeply, you'll slow yourself down. The best thing to do is get your questions answered, and it'll save you time and money in the long run. So make sure you ask those questions. Come to an investment property workshop. Go to the opening of an envelope, anything you can to get all the advice. But don't buy anything at a workshop, at an investment seminar, at a weekend workshop. And stay away from other investors, if you know what I mean. If you see a high-rise building and it's all being sold to Chinese investors, don't buy in that building. That's just my personal advice. And how do you not know that it's full of investors? Well, there's lots and lots of questions, and I hope this afternoon has just sparked a little bit of an interest for you. As I said, that it's taken me a long time. I'm in my late 50s, and I started when I was 30. So I've got a wealth of experience. My business partner primarily is an investor, and now he's a farmer as well. But he looks at things a little differently to me. The finance teams around the country, they'll look at things a little more differently as well. But let me just say that if you've got your A team, or as I call it, a property panel, then you can start moving forward. If you have a financial planner or an accountant that you like, great. But if they're not property investors, you may need to go somewhere else for more property advice. I think our workshops are dated. I think probably got 4 or 5 before the end of the year. They're all, the dates are up on our website. And so if you want to book in, or if you want to book a personal experience with one of our guys, and we don't have any salespeople because we have nothing to sell you, you'll be working with the people who own the company. That's people in Adelaide and people in Darwin, and also the independent finance brokers. Even if you have your own finance broker, I would still run it across somebody like Bridget, while she's online. But anyway, I think I've been waffling on too long. I'm getting the wind up. But welcome to my home in Queensland. If you're ever driving past the north part of the Gold Coast or the southern part of Brisbane, and you want to come to Sanctuary Cove, I'm happy to have a glass of wine with you and talk some more. If not, I'll see you at one of our workshops. And let me tell you, at the workshops, I am just as animated, a bit more passionate. I think that's it from us. That's it. Well, thank you, Bridget, up there in Darwin or Brisbane. I don't know where you are. And thank you to all the people, and especially the guy in Las Vegas, who probably should be on the tables or having a glass of wine by now. So thank you. We'll see you at our next workshop or seminar. And don't forget to hit our websites and Facebook page and ask some questions. Thank you. Bye.